Welcome to Agency Acquisitions and Exits. I'm your host, Peter Lang. Today, we welcome back Stefan. He started his M&A journey. That he would not look like the person I first met. And today, we're going to unpack whether or not that really happened. M&A transforms, transactions transform, and we would like to share with you his journey through that transformation. Stefan, welcome back.
Thanks, Peter.
So setting the table, we have a longer episode dedicated to your first acquisition, which we'll link in the description. You've progressed quite a bit since that first acquisition. In a quick get up to speed timeline, run the listener through your selling of white label agency, the first acquisition, and all the things that kind of set the table for the activities you're focusing on now.
It was back in middle of 2023. I was back in Dubai and I had just met an agency founder who also sold his agency. And he told me about the journey that he went through, and it was his first ever time selling. He never did any M&A. He was a pure operator who did everything from project management, delivery, sales, account management. He built a pretty neat agency around him, and he told me that he sold. And I was like, interesting. Like, why would you sell? You know, it was probably like a nice cash cow. You had a good lifestyle you were living and all that stuff. And then he told me something that resonated to me, even to this day. He's like, yeah, I just felt like I just hit a glass ceiling. And he kept repeating that in different frames of minds. And I was like, oh, interesting. At that time, we just launched another agency called a local agency here in Dubai. We were operating Vesa Digital, of course. And of course, before Vesa Digital, white label agency. And I was like, yeah, you know, I felt like I hit a glass ceiling, but not at the whole agency because I knew the potential was always there. I'm like, why don't I just get the thrill that this guy just had by selling his agency by divesting one of our assets? So I'm like, you know what? White label agency is going to go. We don't like the clients. We didn't like the work. It was more like, you know, it paid the bills, let's just say. So went to market in 2023. We listed on Flippa, Acquihire, a bunch of other different websites. And we got zero traction for like the first 4 or 5 months. It sucked. Nothing happened. So I was like, all right, this is pretty boring. Like, I'll just continue on with my day. And if it happens, it happens. And I believe around that time, when I was going to delist the agency websites, we got in touch again, Peter. That was in early 2024. We got in touch and you told me about, you know, doing acquisitions, growing through M&A. I told you, hey, I'm selling white label agency. What can we do with this? I think from the first time we spoke, it wasn't the first time we spoke. You tried to acquire us back in 2021. But the first time we spoke in 2024, the conversation was, we got straight to business right away. Like, hey, we're selling white label agency. What are you working on? And then you told us about, I think at the time it was Ava that you were doing, right?
Yeah.
And so, yeah.
It was, I had just transitioned to board member and I became more available. And you're like, great, you're available.
Yeah. Yeah.
Can you help me do this M&A path?
Mm-hmm. Mm-hmm.
And I gave you a challenge, which was, I do not like underperforming founders. And you're like, nope, exactly. I'm not. I take action and let me tell you what I'm doing. And that's where you kicked off.
Exactly. Yeah. And then you told me about the course. I banged through that course in a couple of weeks, did that. And then I hit you up like, hey, so, you know, what's it going to take to get you on our board? And yeah, it was good because I saw that you were absolutely crushing it. I'm like, man, this guy is like world fucking class. I need this guy to help me out, to at least tell me where to go and like places I can't see. That being M&A. I always knew I was going to do acquisitions. I just didn't know when I was going to do acquisitions. And then you showed me the light, essentially. You showed me like, hey, this is the way you do it. This is how you do it. It's literally this simple. And look, Peter, you know me. Like, I might not be the smartest guy, but what I'm willing to do is the work. And I'm willing to listen to people who know what they're doing, know where they're going, and have done it before. And that's why I believe that I'm so capable to do anything I set my mind to. And you've helped me set my mind to a target that you helped me discover. You told me what to do. You introduced me to the right people to help me get there. You know, when a plane takes off, before it takes off, it knows the outcome, it knows the destination. Once it takes off, the moment it takes off, that plane is off course. The autopilot and the pilots are always adjusting because they know where the outcome is and they know how much they go off. And so you've helped me, being the plane, adjust multiple times, week after week, even sometimes day after day, in terms of what our outcome is. So yeah, I think early when we got together, I got straight to work. And for the first, like what, it was the first 3 months, there was like no results. It was just like early conversations. I never lost hope and I never lost motivation because I'm like, you know what? Every no is going to get me closer to a yes. And that was my mindset all the time going into this and still is
Yeah.
today.
The general rules of thumb are have 20 conversations as quickly as possible. You did that. You can often find your first acquisition target within those first 20 conversations. That was your steps. And then you also had bad fit discussions,
Yeah.
and you kept getting pulled back into the agency to solve operational
Hmm.
problem sales.
Hmm.
Talk a little bit about that as you were evolving as a leader, as a professional, as a man
Hmm.
going through this
Hmm.
business
Hmm.
while trying to carve out time for something you wanted to do, believed in doing, but hadn't gotten to the result yet.
I was pulled into operations on a sales business development front more times than I wanted to. And that's because it was a lot of founder led sales that I was doing. I had help with the account managers and the recurring sales and the revenue expansion from when they were clients. However, net new business, I was mostly responsible for that. 80% of my time at the time when I was doing that was towards sales. And I did a pretty good job at it. I'm a very good salesperson. I was good at closing. I was good at giving value and of course building relationships. And one of the first things that I realized was if I want to go from regular business development to corporate business development, I have to have someone do this first layer. And your first sales hire never works out. I'll just say that for all the people listening. It never works out. It might sound great. They might be saying all the right things. They might be doing all the right activities, but when they need the fingertip feel on a call without AIs, without any meeting notes, and just be able to talk and speak the game of sales, that's where their light usually goes out. And when it happens the first time, you're like, oh, okay, it happens. Happened to me my first time, and then when it happens the second time, third time, fourth time, and then the trend is that starts happening somewhere in the middle. There's a broken process, so they start working on the process instead of actually doing the job, which is bringing net new revenue in. And so, after a while, you get to understand like it doesn't work. It's not going to be something that you're going to want to keep on for a long time. So we put a stop to that, and I realized that yeah, we gotta continue doing the sales, but in a better manner now with maybe more senior people who've done it before they can help out. And maybe I won't get out 100%. I'll get out maybe 20% month after month and be fully out of it. Today I'm fully out of it. I don't even look at sales. I look at my weekly report of money in, money out, new accounts that signed up, account revenue that has an increase in NRR, and that's my sales job now, is asking a little bit more about the stats instead of talking to clients and seeing what they want.
Yeah, let's get into that a little bit. So we will hand wave over first acquisition because we have that in depth. But as you were going deeper and allocating more time to M&A, your role had to expand and evolve. Let's talk about, we don't have to name names specifically of your team members. Let's talk about like the people's contributions. If you want to name names, sure. But let's talk about finance and accounting. Let's talk about people and ops. Let's talk about the things that you had to raise the caliber of your standards for you to continue to grow and get to where you are today.
Yeah, Peter, I didn't even know what a quarter was, like a fiscal quarter, up until like, a few months ago. I always thought quarters were measured like every 4 months and you kind of make it up because I remember in Canada, you would make up your year start and when your end year is for a tax year. So I thought the whole world did it like that. And you just make up quarters. But I didn't know there was I always knew, I just never looked into it, never really cared to actually know what a quarter was and how to actually measure quarters as we do now. So let's start with the finance division. So you introduced us to our CFO today. He's absolutely world class, really good at what he does at all levels, from the actual finance part to the talks that I've had with my different investors and lenders and investment banks that we're working with. And that alone lifted a lot of weight off my shoulders because I'm like, yeah, I don't need to I don't need to know this stuff. I need to know high level what it means, how it works, and what the benefit is for us and the benefit for the company we're working with. But I don't need to know this. I just got to bring in someone who's, who does this for a living and who has done it for a living. I don't want to call it his age, but for the last, maybe 2 or 3 decades, that's the game he's been speaking. So perfect. And then he helped revolutionize our finance department. So, from what we had before was just one finance manager and maybe a coordinator, we now have a full scale finance team from CFO to financial controller to ARAP to a bookkeeper and a part-time accountant. So that has evolved, and it's really cool when at the end of the month, I can just look back and just see everything properly organized in a way that's like, wow, this is like a really professional company now. So
Yeah,
that was
that's
fun.
that is a very important area to emphasize, which is the financial rigor you apply to your business is not just your knowledge and your experience and what you learn online. It's bringing in people who know how to do it and have done it professionally to do it for you. And once you have that in place, you sleep a little bit better at night because
Yeah.
the money is being tracked properly. Now, it wasn't easy. You were a hot mess. The
Hmm.
project investing in this financial and accounting changeover was quite a bit, took time. You had your hands involved while pursuing deals, while being the CEO, while being the leader. I don't want to make it seem like you knocked that out in 30 days.
If it wasn't 30 days.
So we professionalized accounting and finance. Really important. Accounting got cleaned up, and then finance allows us to look forward with the financial statements and set some assumptions about the business, which allows you to start interacting with outside lenders. Let's talk about that because that also coincided with the professionalization of the accounting books. So,
Yeah.
what'd you learn about those early conversations compared to where you are now? And of course, leveraging your CFO in that.
Though those early conversations it wasn't new to me because I've raised money before in previous companies that I was working at. However, the purpose here was we're looking for funds to help us get to the next level with what we have today and what we're going to get tomorrow. So everything was more tangible, everything was known. When we would do an acquisition, we would share the financials of the company that we're acquiring. We would combine them. We would show how much bigger we're going to get in the eyes of private equity and different investors. When they look at us, they see the total value with the inorganic growth and our organic engine beside it. What's been really interesting is, and the fun part for me talking to the different lenders from the parts that I speak on, is how incredibly quick we've grown. And in some aspects, we've grown a little bit too quick in some areas that cause an imbalance. And there wasn't equilibrium at one point where we all just were going at the same time to the next level. Some divisions were going 2 steps ahead. Some were going 1 step back because this went up too far. However, if you zoom out, the average is still going up, which is great, right? Maybe on the month to month intraday level, like, it's volatile. However, if you zoom out, you just see that everything is progressing and going to the top right. And that's what really excites me. And when I have these conversations with our lenders, our investors, and potentially new firms that we're going to work with, when they ask me, hey, Stefan, what was the experience like doing these acquisitions? You guys have done so many. You guys are working through different sales teams and all this stuff. And I just talk about how exciting it is and like to see all this growth happening at once. And I get really good feedback from the lenders and the investors. Like, yeah, we really like Vesa. We love what you guys are doing. And then when they see our books after, see how organized it is, they think, oh wow, it's growing fast, but it's growing in an organized fashion. So yeah, it's exciting. It's exciting. I spoke to a PE company recently, and they were looking at us and saying, "Wow, you guys are absolutely crushing it. Congrats on all your success." They took a look at everything that we did, and they're like, "Yeah, this is really good." And the feedback I got, like, if we didn't acquire one of your competitors a couple quarters ago, like you guys would be one of our top choices. So to hear that from a multinational private equity company that has billions under AUM was really inspiring.
That you went from someone who was willing to hop on those calls without really feeling 100% confident in your books, but you knew the story and what you were able to create, to someone who is driving those conversations and creating great outcomes by paying people back who provide funding. You make
Yeah.
people money, they're very happy with you.
Hmm.
Now, let's talk through a little bit of that discovery. What are some of the lessons you know now that you didn't know then about other people's money, about outside debt?
So OPM, outside debt, to me, this was, growing up, you always think that debt is bad. However, the deeper you get into it and to understand what a leverage buyout is and to understand how debt actually functions, it's a tool and it's a really good tool. And if you understand that the investors, when they put their money with the firm to deploy that capital, they just want to have a consistent return at a set interest rate for XY amount of months. And that's what they want. So if you can provide that clarity into what your business is producing on a bottom line basis, and you're able to build a capable people around you that can deliver that's really all they care about. And if you can prove that in your conversations with different lenders and investor groups, and you can show that, the confidence level to invest into you is really high. Our investors now, they keep asking us, like, when's the next acquisition? When are you guys going to be doing some more? You guys need some more money? Like they keep coming to us. And while I want to take the money, because I can always find something to invest into. If it's not an acquisition, it's a marketing campaign. If it's not a marketing campaign, it's a new key employee that we can bring on board. So all of these things need to get balanced. And my job as a CEO is to make sure that scale, like if it's uneven 1 or 2 months, I have to now even it up with some key decisions that I have to make. And so, yeah, that's what I learned from talking to different lenders. You just got to show that you're capable to make that scale even and provide them with clarity into your company, what's going on, and then certainty that, you're going to be covering that debt service with the acquisition quarter after quarter.
You have had a lot of conversations with a variety of different debt sources. What did you learn about those companies, their interests, and then where did you land on kind of the more consistent source of financing for Vesa?
Yeah, let me just pull up my notes because I wrote about this. I remember early on, I looked into SBA, but as a Canadian and not an American, I don't have access to that. So I had to look at different types of lenders that would be able to finance our deals. So yeah, we went down the venture debt route and we looked at different providers. I spoke to many, many firms. We spoke to even different brokers. Everyone had a high confidence level. However, we got really lucky with our firm because they were still relatively new in the market. They wanted to make a name for themselves. So partnering up with the small business like Vesa Digital, it was in their best interest for what we were doing. And we made a really good use case for their funds with what we were doing. So we were one of the first firms with that firm to start doing acquisitions that they were financing with their facilities. So we helped them prove a model. We have a great relationship even till today. And they know that, time is coming where we're going to have to upgrade our pedigree of capital. And they've been helping us as well with introductions, structuring, and all that kind of stuff. So it's really good when you find a good lender that is like a business partner and that helps you even do due diligence on deals and helps you keep certain individuals on the team from acquisitions accountable with you. It's pretty inspiring because it's basically like, it's not just about the money, it's the value they add with that money that where I found the most value. So yeah, it was exciting and it still is exciting. It's a really good relationship. And I'm going to hate to basically, it's going to be bittersweet when we upgrade our capital stack and away from them, because it was such a good relationship and it was really good to have that kind of exposure early on. I just hope that my expectations aren't wrong for the next pedigree of what the people are going to be like.
Yeah, it's a pro tip, which is if you ever want to source a bank relationship or debt, you go to a new office. So like a bank just opening has a certain amount of capital it has to deploy. And it's great when you find an early one because they're the ones who are trying to deploy capital as quickly as possible without having the proven name. And they'll take bets that more conservative sources may not, especially on asset light or digital businesses. And so whether it be a local provider, so like the new bank just opened down the street, or a new company spun up and it's more of a digital bank, go to people who are starting off new and they'll take greater risks in supporting businesses that are a little bit harder for conventional debt. Because you talk to a lot of folks. Again, you said many, but you spend months having discussions, taking calls.
Yeah.
And hopefully the listeners paying attention that your job description is changing as we're moving through time with you. You went from someone who was business development, rainmaker, someone who organized the people who then managed the teams and fulfillment, to capital allocator. You're making decisions around how the company is going to grow, where and when do you need capital for it to grow, and then, of course, creating returns, not just for you, but for your stakeholders who are backing you and supporting you. So you went from, it's 2026, about 2 years, from a small entrepreneur, damn good salesperson, to a capital allocator with many deals under his belt. Let's unpack the people side a bit. So I'm pulling everyone in with us into our advisory meetings. Stefan doesn't love the people side of the business. He loves people, but he doesn't love the people management side of the business. And so just like not understanding maybe the quarters did, you brought in the financial acumen and capability, so you didn't have to worry about that anymore. You did the same thing with people. So let's describe how you leveled up the standard of people ops within the company.
Yeah. So as the company was growing quickly, people became an issue. As we grew, we had victims of M&A. We've also had people internally that were feeling changes happening too quick. And the people who felt the changes happening too quick, it was the best thing at the time for them to go find another opportunity where they would be better placed to thrive instead of being in a place that was rapidly growing and not knowing where they're going to be in terms of one, hierarchy, two, capability, what they're going to be working on, and then three, who they're going to be working with. So that loss of control from some members of what they're going to be working on and who they're going to be working with and what they're going to be working on was basically an issue that I had to deal with. And obviously it wasn't easy. We've had people quit. We've had people say, "Hey, Stefan, you know what? I love what you built. It's Vesa has changed my life. However, I'm going to go and find another opportunity," or, "Hey, I'm going to go and do it solo," or start my own thing. And now when I hear people say start my own thing, I love it. So I'm like, perfect. they're going to take what they learn here to go start their own thing. And that really inspires me. So as the company grew, I realized that I don't want to deal with the people aspect anymore. And so because the people was not my aspect, and I'm a very direct person, and if I have a problem with someone or something, I'm going to say it. I'm not going to hide it. And some people don't like that, and it is what it is. But I realize that I can't drain my energy on these sorts of challenges and problems, and learning how to cooperate with people who are expecting a little bit more than what they should be getting. I'm not talking about money. I'm talking about the other things in working at Vesa. And so I brought on a fractional COO who's done this many, many, many times over again. We brought in as well Felix, who's also done this many times, to help with the people aspect of the business. And they've helped keep people in check, keep people accountable to what they're supposed to be doing, and then letting me know what their feedback is on certain individuals as we continue growing. And this is everyone from the most newest position at Vesa to the people who have been here all the way from the beginning. Like, everyone was basically going through an evaluation of who we have now that's going to go to the next level. And obviously, someone told me, I think it was you who told me this stat. Was it you? Maybe you'll remember. You'll let me know. Did you say to me that your company is a sports team and the players constantly... you told me. That's right. Yeah. So what was it? What was your famous quote?
It's not famous yet.
It'll be famous after this podcast.
The metaphor we like to use is your team's a sports team. And in order for you to move further up within the sport, you need to have better talent. And so the people you have with you today might not be the people you have to be successful tomorrow. And you have two choices. You either invest in them, which is a slow investment for them to be... Think about recruiting someone out of high school and then maturing with them before they get, Wimby aside, if we're talking NBA, get to the level of them being the caliber of talent that wins championships. But if you want to win a championship next year, you're going to have to put together the team that can win next year. And that requires you, the owner, to get Bob Myers from the Golden State Warriors, who's now with Philadelphia, who got LeBron. No, that aside, now I'm just getting too specific in NBA. It requires you to get a manager, someone who has experience in putting the team together and knows what it looks like and knows what they need so you can execute. This whole thing that you have to wait years, blood, sweat, and years to have the opportunity for a fast growing business is a false belief of entrepreneurship. Now, there are people who prioritize people centric companies, talent first, and then uplift them over a period of time. They're just companies that grow at different paces. And your ambition was to grow much, much faster. You said, I want to win the championship next year. I'm my best employee. I work the longest hours. I do not complain. I get anything that I have done at a timely manner. And then I'm also trying to grow as a professional in my own business and do the hard things. And you want people around you who can keep up or people you can take with you. So having someone responsible in people ops has allowed you to do that. You don't have to learn every aspect of your business for it to grow. You shouldn't. It won't grow. And you did a wonderful job bringing in a fractional COO, someone who's managed hundreds of people in organizations through M&A, through integrations. So you, again, do not have to worry about that side of the business. You get the reports.
Exactly. So that to me was very liberating, so I can focus my time exclusively on doing investor relations, doing M&A, and still overseeing what the senior leadership of Vesa is doing on a monthly basis and helping support them to reach those goals as well. So yeah, it's exciting. I'm even more excited to see where everything's going to be by end of the year.
There's another challenge I typically give to folks who've gone through the course or come to our events, which is talk to prospective buyers, even if you're not looking to sell, because you probably might want to sell in the future. But why wait to have the conversation with a prospective buyer when you're willing and able and most enthusiastic to sell? Too much pressure. And so I put the challenge to you, say, reach out to a few firms who are big, massively bigger than Vesa, who may not acquire Vesa now, but will in the future because of your growth, and take some conversations. And so you did. I think you booked them like within a week and you learned a lot. What were some of your lessons learning in speaking with the private equity backed strategics who could be your potential next owner slash acquirer in the future?
Yeah, that was a really good challenge. It opened my eyes to different perspectives after what happens and what they're doing. A lot of the CEOs that I spoke to after the sales gave me a quick rundown on why they did it and why that timing for them was perfect, even though they thought it wasn't perfect. And usually the common consensus I got, of course, after like certain EBITDA thresholds are hit, is they should have done it earlier. One CEO that I mentioned is now selling his agency for a third time, and it's been his primary wealth creation tool for him and his family. And he's going to do it a third time. He might even do it a fourth time. So that was pretty inspiring to me. And he doesn't do anything anymore. He just sits as the chairman of the agency. He has an operating CEO that oversees the day-to-day operations and the executive team. So that was really cool. Speaking to different private equity companies, that was also insightful to see how they look at the market in general, getting a market sentiment from them of like, AI, what's happening with AI implementation, what's happening with AI search, what's happening with AI augmentation for the workforce, and hearing those perspectives, that to me, it kind of put some, fire under my ass that we got to hurry some things up. While at the same time, it kind of voiced some of my concerns that weren't concerns now, but might be concerns a year or two from now. So, AI is here, but we're not as close to agencies being commoditized as we think. It's still a couple of years out. However, being on top of the innovation and being on top of, for example, AI search was everyone's priority, even if they weren't a search agency, but just exploring the technology to see how they can have their agencies and the clients of the agencies on that was top, the most common thing they all said. So yeah, it was good. And essentially how they structure deals, why they structure deals the way they do, how they keep track of companies, all of that was super inspiring for me and just getting a perspective. I now know what I have to build Vesa into to make it the hottest chick at the dance when it's time to go to market. And so, yeah, it was good. And I'm still doing that challenge on a monthly basis. I'm speaking to new buyers, different strategics, just seeing what's in the market, grabbing different feelers, making an early access list for when we do decide to go to market. So yeah, it's fun.
There's I don't want to say large list of templates and resources that I give in the course, but there's some useful ones. and some that you have built into Vesa's operating system and its M&A side, from the questions to resolve, to the audit, to then the model, which you've now matured because of your multiple acquisitions that you have integrated into it, reporting requirements, and the additional reporting you do above those requirements to satisfy your lenders. Talk through some of those kind of pro tip tools, spreadsheets, questionnaires that you leverage now in a very masterful way. Because again, let's kind of demystify it a bit.
Yeah, so the audit is super important. We do the audit now all the time. I even started getting the audit past different brokers to have the target companies fill it out. So that's been going really well. That all feeds into Claude, and Claude helps build a file on that deal from all of the meetings that we have and the meeting notes from the audit, the financials, our emails, our Slack channels where we discuss the deal. So the audit to me was the number one thing. However, another tool that you provided, I'm not sure this is available to people if they're not in the digital agency business community, but the vivid vision, how to create a vivid vision. So scary that you actually want that to be your vivid vision. That of, you know that you have to step into a new version of yourself. You have to go through different scary challenges to get to that point. So the vivid vision for me really helped me to understand what my outcome is and how I'm going to get to that outcome. And I reference it every so often to see where I want to go, and that has also helped us a lot. The model was initially kind of just like an esoteric model of what we want to be, where we want to go, how we're gonna get there, and then after some time, I think it was only until like last year we started really tracking it and following it. And yeah, now I also have that plugged into Claude where he essentially views our income statements, our balance sheets, our acquisition targets, and helps model where we're going to be and what adjustments we have to make things work. So everything gets run through that model with the help of Claude.
Yeah. And then the last one that is a helpful resource for collaborating with a remote and distributed team is questions to resolve. So maybe speak through how your team contributes to the M&A process and how you use the questions to resolve and the audit in other forms to kind of get alignment on the team before proceeding with an opportunity.
Yeah, so questions to resolve is super important. So I have key members looking at the audits for them to understand what we're potentially getting ourselves into and ask questions. And then these questions are presented to the questions to resolve to the potential seller of different questions that we have related to finance, sales, marketing, integration, composition of the teams, and all that stuff that make an agency or a company. And so we use it just to build a profile and know what to ask for or what to dig into when it comes to due diligence. So we use it as a compass for when that pre-integration / due diligence phase of the acquisition starts. I'm gonna turn down my AC. It's freezing in here.
Okay, we can cut that part out. And then, so for clarity, the questions to resolve is a risk mitigation tool. Risk and compliance departments use it. And it centers from a simple but very effective process, which is if you can do the decomposition of every question that needs resolution to move forward with the deal, so list everything, and then you can spend the time, most people don't, going through each question and resolving it with the seller and with your internal team, you have a higher probability of close. But it requires significant discipline because it's a very tedious task and it's hard to walk through it day by day with sellers. And Vesa, you've done a good job getting the team involved. They are religious in their participation in it. They follow that process very effectively, which enables you to go into the calls with sellers well prepared with business continuity from the rest of the team and communicate properly at every stage, which has been really impressive. Now, let's pivot quickly as we're getting to the end here with let's talk about if we could go back and on those early conversations where you and I are getting connected, I phoned a friend and it happened to be you from the future. So if I said, Stefan, here's Stefan in 2026, what are some of the things you're going to tell yourself to watch out for? Pro tips, advice. Let's unpack this advice from the future.
Listen to the experts before you listen to yourself.
Good one. There's another one.
Don't take things at face value. Have the discipline to dig into things a little bit deeper. So items in due diligence, items in process, items in how they work, on a personnel level, super important, and something that has to be adhered to and paying attention to. Thank you. And I think that understanding that the team is ever changing and we got to put key people in key spots for them to have their best performance. I would also tell myself back in 2024 to reach out to more people because this stuff is simple. It's not hard at all. It's really simple, especially when you have the people and the process and the discipline to run it. I would say, Stefan, reach out to more people. Instead of
Get in
one
front of
campaign,
more.
have 10 campaigns. Yeah, get in front of more opportunities and more people. Lenders are going to come either way. Lenders you don't really have to talk to all the time because once you're with one lender, they usually have a capital markets team that'll introduce you to other lenders. So for me, it's just reaching out to more acquisition targets and speaking with more people a lot quicker and only focusing on that. And the day-to-day stuff that I was doing for the first year, to remove myself from that a lot earlier than when I did.
Awesome. You've been on an impressive journey and have, just because we haven't covered it here, do we want to share how many acquisitions to date?
Yeah, we've done 5 acquisitions to date. Out of those 5 acquisitions, the last 2 were pure acquihire deals, a design agency in South America, and then also one of the leading web flow agencies in the UK have joined Vesa Agency Network, which we'll be announcing soon who they are, and we're really excited about that. And there's many more in the pipeline in different segments of marketing that we're going to involve soon at Van.
And my rule is 5 deals not to suck. And I remember when you sent me the message after closing the 5th one, you're like, does this count? I know it's small, but did I get my 5th deal?
Yeah.
And my comment to you was a deal's a deal. And also your ability to execute the 6th and 7th deal after 5 is really important. And the other advice I gave you, which is the goal line is going to evolve as you evolve. Because when you and I met, you're like, I have a goal. I want to get to a certain size, scale, and this is where I want to go. I don't quite know how I'm going to get there, but I know M&A is the path that will get me there. And then as you've matured the business and you've matured as a founder, you've gotten a lot clearer about the destination, both in how you articulate it through the Vivid Vision, which is a write-up of a 3-year version of the business. So a future state that you're trying to achieve, all the way down to how you're evaluating the market and its influence on your business. So all in all, it's been a wonderful journey to see you transform. Transactions have transformed you well, and you're a great resource for those who are trying to traverse a very similar path. So thank you for that.
Thank you as well, Peter. If it wasn't for you, I wouldn't be where I am today.
I appreciate that. I'm very confident, even without me, nothing's going to hold Stefan back. And that's the thing I said when I said yes to supporting Vesa for the long haul, which was I believed you are a founder who says something and then by hell or high water, make sure that thing happens. And so I appreciate your energy. It's been always a pleasure. And for all of you listening who are going through an M&A journey, know that there's someone who's going through the exact same spot, whether that be integration headaches, multiple sellers with unrealistic expectations. There's always going to be the same song being played in the M&A band, but it's a better game and the person you become is much better. So Stefan, thank you for being such a great example for both the M&A community, but also the agency world at large. Thank you.
Thank you as well.
There we go. If you like this episode, probably like one of our other episodes, click here.